All right, good morning, everyone. Tony Laporta here with TonyLaporta.com. Anyhow, I never did I actually canceled my offer up there at the 144.06 level. I canceled it before the data came out, and the data that I saw was not bond friendly. That 210 initial claims number was the best number I've ever seen. And that means less people are losing their jobs. That means the labor market remains tight. And if the labor market, you can't have inflation without wage growth. And if the labor market remains tight, we're going to see wage growth. And if we see wage growth, then there's a return to inflation, and that is not bond friendly. So I've got a trade on at the moment. Bonds right now are 18, 19. This is as low as they've been since the data was released. I'm basically short 7 lots around 10 and some change, and I'm just going to see what I can do with this trade. Bond market, not the bond market, the stock market has ticked back up to 18 and a half, something like that, and that's from an overnight low of 98. So I think the pivot, someone posted in the room that the pivot is 27. So, anywhere back up above 27, if this stock market continues to rally, I would think the bond market's going to continue to erode lower. Now, if the bond market erodes lower, I won't get too overexcited about the short side. But if this bond market, all of a sudden, we're trading 143 even, first 143.10, then 143 even, and the stock market's sitting up there, near the pivot, well, then you got to think about, was yesterday's sort of breakdown in the correlation, because the bond market's been leading the bus. The bond market, when the bond market rallies, the stock market rallies. When the bond market came off, the stock market went off with it. Yesterday, that changed. Yesterday, the S&Ps closed down 33 handles, and the bond market closed up 28 ticks. As I speak right now, the bond market is up 4 ticks, and the stock market's up 2 handles. So, but the bond market is well off its overnight highs. So we're starting to see, that correlation, lower bonds, higher stocks. Now, lower bonds is one thing. Lower bonds going down hard is another. So I'm not sure how that's going to play out yet. I'm not sure what our Fed chairman has, or what type of QA we're going to see. But, sorry, I was just looking at the TV. But the data I saw this morning is not bond friendly. And we'll get a better look at average hourly earnings in a week's time. But that data this morning is not bond friendly. So I'm going to try to sit here and run a short bond position for a while. That's about all I have. This is Tony Laporta signing off.